Welcome back to Instables, everyone. So I'm going to go with you guys in the S&P 500 again. This is the SPX. I usually go over the SPY typically every single day during the week, but I'm going to go over the SPX. I also am going to go over the dollar, the US dollar, very key on how much pressure we have been getting to the downside. I'm going to go over all of this with you guys. Now, before I jump into this, if you guys can do me a huge favor, smash that like button. If you find this video useful at all, hit subscribe if you want to see more market updates that I mention every single day throughout the week. And if you guys are day traders or you are looking for very volatile breakouts that we mention every single day in the Instables room, go to instables.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the S&P 500. Again, this is the SPX. We typically go over the SPY just because it's a lot easier. A lot of people like to trade the SPY a lot more than the SPX for the most part. And also, if you guys do want to trade futures on the S&P, you guys can trade the ES. Again, that is the S&P futures. Again, another way that you could be trading if the market is closed, maybe you want to trade earlier or possibly later in the day. It does open at 6 p.m. If you do want to trade futures. Now, looking at SPX, as you guys can see, again, we have, again, a rejection to the downside. Our question is, will we have a bounce here, or are we going to continue on with this continuation lower that we have been with an engulfing candle to the downside after Powell spoke, again, giving us restrictive policy rather than neutral policy from his prior FOMC. And as you guys can see, prior, we did have this gap down after we were anticipating a possible decrease in CPI. However, we got an increase in CPI. We did have a gap down, and we did lose that anticipation, taking away everything that we did anticipate to the upside for that possible rally. So now our question is, as we are respecting our 20-day moving average curling down below our 50 here, as you guys can see, our 20 crossing below our 50 here, we are wondering if we're going to continue to respect it to the downside or possibly jump back above it. So our question is, do we have room to the downside? The answer is yes, we are just jumping into oversold territory. We need to make sure we are careful. As you guys can see, we are going to be looking for bullish divergence, looking for higher lows as we are oversold, looking for that confirmation jumping out of oversold territory, getting confirmation jumping out of oversold territory for that shorter term play. Again, if we're looking for that continuation jumping out of oversold territory with confirmation on pressure, again, we do want our white sheeted lines to come in on our buy pressure. Again, this is our MACD, looking for our EMA lines ultimately to cross here. Our 12 to cross back over our 26 will give us that pivot point for that possible continuation. And to get that continuation, we do, again, want to jump above the median of our MACD to see if we can continue. Again, we had the strongest rally of the year when we did have our EMA lines crossing above the MACD, and we did mention this very early. As you guys can see, we had our EMA lines crossing. We had early signals on this with this decrease in sell pressure, and we had that nice rally. So again, just looking for similar moves here. We will stay focused on candle structure and pressure. Now, looking at the dollar, I wanted to make sure we cover the dollar. This is a DXY. You can also follow the UUP. You can follow either or. As you guys can see on the DXY, we have been continuously ripping, and as you guys can see on our MACD, we have been pointing up. We're above the median of our MACD, giving us a lot of pressure to the downside on the S&P 500. So in my opinion, if we are looking for more pressure to the upside on the S&P 500, we want to see some type of pivot point happen here. We want to see our EMA lines crossing down below one another, and then again, we still would be above the median of our MACD at that point if we are looking for that stronger push to the upside on the S&P, and for the dollar to not have that pressure to the downside on the S&P for us. We'd want to see if we can get our EMA lines to cross back under our MACD. That would be that strong move to the downside for, again, the S&P to make a nice rally, in my opinion. Again, that would give us a large rally, in my opinion, because, again, the dollar has definitely been giving us pressure to the downside, and very rightfully so, because we have a lot of pricing in to do with a lot of restrictive policy ahead of us, and so we do have a lot of pressure here on the dollar, so giving us a lot of decrease in pressure on the S&P 500, just making sure we are careful. So our question is, as we are testing lows of the year with the wick to the downside, what would we be looking for? In my opinion, sure, you can look for a possible rejection to the downside, look for a possible bounce, possibly chase room to the upside. That is not as much room to the upside because we do have our 20 still curling down until we have our 20 crossing back over at 50 and we start to respect it. And we look for, again, possible bullish setups from here, looking to see if we can respect our 20-day moving average. Until then, in my opinion, playing to the upside is more risky. Even if we do bounce back, I would be looking for a better setup to the downside if we continued on with this momentum. Again, assuming that we would, since we are testing lows of the year, in my opinion, I would want to see some type of bounce back, some type of possible doji candle coming out. I mentioned yesterday on the SPY that I would want to see some type of pushback onto a doji, and then possibly a rejection of the upside with an inverted hammer, some type of play like this to happen, and then get confirmation on a possible engulfing candle to the downside, and then possibly continue on lower from there. But again, with this wick to the downside, we need to make sure we are careful we don't continue on with that bounce and possibly retest our 20 before we do continue on below lows of the year. However, if we do bounce back, and we did play safe here, and we didn't just play short because we got to our 20-day moving average, and we did let this bearish setup come to us, and we happen to bounce back over our 20, then we would have not lost this play because we waited for that bearish setup. So again, making sure we are waiting for that bearish setup is very key as far as playing back to the downside if we are not going to play a possible engulfing candle going into next week on Monday. Again, if we don't come out with an engulfing candle on Monday, then in my opinion, we are going to possibly bounce back, possibly look for that bearish setup, and that's what I'll be looking for as far as playing to the downside. So again, just looking for that confirmation. Again, we are going to have that pivot if we have our EMA lines crossing, have our early signals on those white shaded lines, or we're going to be looking for that possible setup to the downside with our 20-day moving average. And again, with the dollar continuing on higher as you are playing to the downside is going to be, of course, more so to your advantage. So making sure you are watching the candle structure on the dollar is going to be very key, because if we don't have that continuation on the dollar, we can easily bounce back here, possibly consolidate for quite a while until we do continue on into lows of the year if the dollar does cool off by a large amount coming into Monday. So we need to make sure we are watching the dollar as we are watching the SPX and what exactly we're playing into. Now, again, with that said, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instant Bulls Room for only $15 a month, you guys will never miss a breakout alert today. Again, I know the market could be very choppy. I mean, the market has been selling off for almost most of the year, and we have had amazing breakouts in the Instant Bulls Room. Again, just making sure we are focused on candle structure, making sure we are focused on levels, and volume is what we will continue to do in the Instant Bulls Room. And all of you Instant Bulls that come over every single day and support the channel, I appreciate every one of you guys. I hope you guys do have a blessed rest of your weekend. I'm going to go over the SPY with you guys tomorrow and exactly how I would play into it. Let me know if you guys like me going over the SPX. I actually do want to know if you guys want me to go over the SPX more. Let me know in the comment section if you guys even prefer the SPX over the SPY. Would love to hear what you guys have to say. Maybe I'll go over both of them. Maybe I'll go over the ES, SPX, and the SPY every single day. Just let me know in the comment section. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in the next video.